Good evening, Financial Independence viewers. So today we're going to be doing an overview on Chewy stock. This is one of the other positions I hold in my portfolio. The market value is 6,700. I've got 80 shares. It holds 14.23% of my portfolio. And we just got our shipment in today. As you can see, these are American Journey, but these are made up under Chewy's logo. Also, I didn't want to bring the dog food in here, but as you can see, we got a bunch of different stuff from them. And we got it up under every 5 weeks it gets shipped to us. So using Chewy is actually cheaper than actually going to any kind of PetSmart or any kind of store like that. That's why I do use Chewy. It gets shipped directly to your house, zero shipping, and it comes, you can set it in increments of like 1 week to like every 9 or 10 weeks that you'll just get an automatic food coming in, and the shipping's free and it's cheaper than buying it from the store. Put these to the side, won't get into it. So you might be wondering, is Chewy stock still a buy at these levels? We've seen it go all the way up to $120 a share at a low of 36. I want to say mine's around like 40 something dollars that I got per share when I started investing into them. The market cap's basically 35 billion right now. And looking over their income statement, they have a nice stepping stone that you would want to see with any kind of growth company. As you can see, in 2018, 2.1, and this is numbers in thousands, 2.1 million, 2019, 3.5 million, 2020, 4.8, and 2021, so far we've got 7.1 million. So nice stepping stone each and every year. The cost of revenue is somewhat going up, but not near as much as their actual revenue coming in on top line. Now heading over to balance sheet, just like I said with any other growth company that I have, I want to see total assets more than total debt, especially short-term debt. So total assets we have here 1.7 million. This is numbers in thousands once again, with a total debt of 328,000. So they've got about 3 to 4 times the amount of assets as debt. This is one article that I came across that was pretty good, and I figured I should include it up under this video. And this is coming from Zacks. So Chewy outpaces stock market gains. What should you know? Chewy will be looking to display strength as it nears earnings release. In the report, Chewy posted earnings of 2 cents per share. This would make year-over-year growth 116%. Our most recent consensus estimate calling for a quarterly revenue of $2.12 billion, up 31% a year ago. Looking at a full year of Zacks, consensus estimates suggest analysts are expecting 17 cents per share of revenue, or $8.95 billion. These total would make changes of 88% and 25% respectively from last year. And from Zacks, they have a ranking from number 1 to strong buy, number 5 a strong sell. Zacks rates this as a number 2, which is a buy. So some of the questions before I did buy this stock, and I wanted to revisit some of those just to make sure everything was on track whenever I started buying the stock. One of my things I was asking myself is Chewy subscription growth, which is what I have. That's where the package comes in. You can set it at weekly intervals. I have it as 5 weeks coming in, and that supplies all my pet food, treats, even the wet food that I mix in with dog food. And the telehealth growth, the market potential, how many pet parents are there in America? That's one thing Chewy calls us is pet parents, which I think is awesome. And then I wanted to go over the average pets per household and like what kind of revenue that could potentially bring this company. So looking over Chewy's 10K that they released with their Q4 and all of 2020 financial reports, the rapid shift to online shopping with significant remaining opportunity. So this is coming off of Chewy's latest 10K report that they released with all their financials and for their Q4 earnings release. So one of the things, Chewy subscription growth that I wanted to go over, the pet industry, like many others in the U.S., is expecting to continue shift towards in-store and online purchases, and it appears to be migrating and has been accelerated due to the COVID-19 pandemic. With tailwinds expecting to continue for several years, in 2019, e-commerce claimed the top spot for the pet pet food sales and channel for online shopping, and continues to take market share from the brick and mortar retailers. So just like everything else, online e-commerce is more and more taken over from brick and mortar retailers. This would represent over a 40% CAGR, compound annual growth rate, for online pet retail over the time frame that we would be going over from last year. Package Facts estimate from e-commerce channels to rapidly increase over 34% of the total pet food market by 2024, up from the pre-pandemic estimates of 24%, while other channels are projected to remain flat or decline. So according to the Package Facts from April and May of 2020 survey of pet owners, 64% of dog and cat owners agree that more of their everyday spending has been done online, and 73% stated that they feel safer from buying things online as opposed to going to the brick and mortar stores. We believe that secular trends toward online shopping will continue for a significant period, and consumers look to benefit from the convenience of home delivery and subscription-based purchasing, as well as the heightened safety of the contactless shopping experience. So this company did experience a lot of headwind going into the pandemic. Growing trend of subscription-based purchases. So what I have right now, additional Packaging Facts research indicate that 58% of dog and cat owners like the idea of home delivery for pet food, and over the past 12 months, 12% of the online pet food purchases and 7% are treated purchases were subscription-based. We believe that the trend of increasing of subscription-based purchases behavior within the broader secular trend towards online shopping supports higher level and customer retention and revenue visibility. And this is something that their CEO said. A lot of these people that are coming from the pandemic are actually staying towards their subscription-based services, because as they find out, it's just as cheap as going to the brick and mortar stores. It gets delivered to your home. You don't have to carry around a 60-pound bag or whatever dog food that you do buy. It gets delivered to your house in one of these boxes right here, along with any other treats. So I wanted to go over the strengths that Chewy has. So Chewy's commitment to customer service is in the core brand itself. Customer centricity, everything on our company is organized around the commitment to provide an exceptional customer experience. We make the shopping experience easy and enjoyable. The next bullet is customer service expertise that is knowledgeable and empowered. Our customer service share a common brand. They love pets. All of us that use Chewy, or anybody that potentially uses Chewy, they love their pets. That's why they call them pet parents. The next bullet is engaging with customers on a personalized level. We empower the CRS to go above and beyond for our customers, and they do so with the knowledge, and our commitment to our customers is a number one priority. So customer service is essential for this business, and they do an awesome job at that. They offer the widest assortment as any other pet specialty retailer. Chewy is built around the pet parent itself, whereas you have Amazon and that are more focused on a broader market. Chewy is narrowed in on the pet e-commerce play. Their highly efficient distribution network provides exceptional delivery and ongoing cost averages to superior customer service. The strategic placement of our fulfillment centers across the U.S. enables a cost-efficient shipping to over 80% of the U.S. population overnight and almost 100% in 2 days. So the majority of customers they do have, 80% is overnight whenever it gets shipped out. I'm in the 80 percentile range. I live in Tucson. I got an email saying the other night that this was going to get delivered. Sure enough, this morning at the front door, all I had to do is pick it up and place it in my home. Never had to go to a brick and mortar retailer, and it saves money too. And 100% of the entire United States is within the 2 days. Our high volume of our sales participate in the auto ship subscription program. That's what they call the auto ship, that the subscription-based customers. Relatively low seasonal with our demand, allowing us to optimize asset utilization across our network and lower our fixed and variable cost per unit and our inventory levels. Another thing with this subscription base, all of their subscription customers, they can allow like time frames, so they know when things are going to get shipped out, so they can go ahead and order ahead of time, and that way their warehouses never get low on product. We invest cash flow generated from our existing customers base to attract new customers. I'm sure just about every viewer is going to say that they've seen some kind of commercial. They've been doing a lot of advertising on whether you go on Hulu, Netflix, or if you're watching on cable. Additionally, we expect to continue to invest in technology, product innovation, and continue scaling our platform, customer service, marketing efforts, and supply chain in order to drive growth. Another thing that I am looking out for this company is to acquire new customers. So we intend to increase brand awareness and reach new customers by investing free cash flow from our existing customer base and advertising and marketing to acquire new customers for existing new channels, given high levels of customer satisfaction. And we see from our customers, we believe in their significant opportunity to grow our business as consumers become more and more aware of our brand and our strong value proposition. And they also leverage the technology and operational efficiencies. Another thing that I wanted to hit on is they continue to grow their proprietary brands. In 2016, we launched the first hard goods proprietary brand, Fiscal. In 2017, they also launched 2 more brands, American Journey, which is the treats that I got, and Tiley's. So millions of customers have tried reordering at least one of our proprietary brands over the years. Our goal is to provide value to our customer by offering these brands and compelling quality and prices. Another thing is they're wanting to expand more into the pet healthcare. They launched in 2018 Chewy's Pharmacy, which by the way beats Amazon in every price category. That's one thing that I'm convinced that Amazon will never take over Chewy. If anything, they might buy them out longer down the road as they try to broaden their markets too and take over market share, but they're going to have to pay a premium for Chewy, and Chewy's going to grow far by that time. So in October of 2020, they launched the new telehealth service, and it's called Connect with a Vet. This allows pet parents and veterinarians to leverage the company's platform to preserve continuous veterinarian care. With the services, Chewy makes it possible for pet parents to connect directly to a licensed veterinarian to ask questions and get answers to some of the most common questions that they do get. And guys, this is great. So you no longer have to go to an actual vet. Say your dog's throwing up or something, or just something that's not life-threatening. Instead of going to an actual vet in person, you're migrating the risk of the pandemic yourself because you're not getting to see people in person. You're asking all these questions to a licensed vet, and you're not going to have to pay the cost of going to a vet. The I think our vet here is like $80-something just to go in to get a checkup. It's just a flat fee that they charge. You're gonna have to pay far less using this site. So they published their fourth quarter and full 2020 financial results. So I just want to go over some of the key takeaways for fiscal quarter 4 of 2020. Some of the highlights are net sales of $2.04 billion. This percentage grew 51% year over year. The gross margins of 21.1% expanded 300 basis points year over year. Net income of $21 million includes store-based compensation expenses of $24 million. Net margins of 1% improved 550 basis points year over year. Adjusted EBITDA of $60.8 million and increased $6.6 million year over year. An adjusted EBITDA margin of 3% improved 340 basis points year over year. And for the full fiscal year of 2020 highlights, net sales grew $7.15 billion. This grew 47% year over year. Gross margins of 25.5%, 190 basis point year over year. Net loss of $92.5 million, excluding share-based compensation expenses of $129.2 million. Net margins of 1.3%, improved 390 basis points year over year. Adjusted EBITDA of $85.2 million, increase of 166.2, and adjusted EBITDA margin of 1.2%, improved 290 basis points year over year. So the key takeaway from that is they're getting more top line year over year. They're growing their revenue significantly. The fiscal year of 2020 highlights, that's 47% year over year. and their net loss is coming down as they become more efficient and build out more and more warehouses. So this is pretty cool. I went over, wrote down some of those statistics, and this is off of ili.org. So the average pet per household, dogs, is 1.6 per household, and that comes in at 76,811,305. That's how many dogs there are, and this is United States alone. For cats, it's 1.8, and that's going to be 58,385,725. The visits per year for the annual cost of going to the vet, for say, is $410 for dogs and $182 per cat. This represents a growth rate of 23% from 2015 to 2019. So this represents a 4.6% per year, and the pandemic has grown this market even faster than that. So this year we could be looking at a 6-7% once this year comes to an end and they report all of their 2021 financials. In my personal opinion, analysts are tripping on this stock. So for the current quarter of 2021, they're averaging an estimate of a loss of 4 cents a share. They're going to beat that. I guarantee they're going to be profitable. Analysts were expecting a loss of either, I think it was like 5 or 7% last quarter, and they posted a positive of 5 cents per share. The next quarter, they're still expecting a loss. They're going to beat that. This company's already profitable, and they're people that have these subscription-based services and using their telehealth, their pharmacy, they're going to continue their customer with Chewy itself. So they're not moving on to other products because this company's great and it's a lot cheaper. The current year, they have them at a positive for 1 cent a share after they release their 2021 financial results. I'm going to say probably about 15 cents a share. They're going to kill that earnings. And then for 2023, they have them at 28 cents a share of positive. So the revenue estimates, the average estimate for this quarter is going to be $2.17 billion. Probably going to be around $3 billion. Next quarter, they have them around the same thing, $2.18 billion. I say maybe $3.2 billion. The current year for 2022, they got them estimated at $9.11 billion. They're probably going to come in with about $15 billion. And then for 2023, they have them at $10 billion. All of these estimates are low, super low. Even if these estimates are right, though, you're still looking at this year around 27.4%, and next year coming in at 18% top line revenue growth. And some of these analysts, they're expecting for the next 5 years per annual of about 132% growth on top line. And with this, financial independence viewers, I hope this gave a good overview and run through of Chewy stock and kind of brought ideas to your mind. That way maybe you can add this to your portfolio. Once again, I'm not a financial advisor, but I do feel very strongly about this company. And as you can see, I do use their products. That's one of the things I love investing in companies that I actually use, as the great Warren Buffett said. And with that, hope y'all have a good day.